All right. Hello, everybody. Welcome back to another episode of the Market Close. Been a pretty volatile day across all asset classes, in particular, obviously, stocks got hit pretty hard. We're getting a very small recovery, if you even want to use the word recovery right here. The S&P 500 was down almost 3.5% on the day. There's your little green candle right there. Some signs of hope bouncing from 508.46 right now to 512.36. So instead of being down 3.5%, we are down about 2.5%, which I guess is something. But the entire market today has been a bloodbath across the board. And there's been some pockets of green, like a Netflix, which is holding on to its green 2%. But AMD down 2.6. Tessie got earnings tomorrow, down 6.5. Google down 2.6. Meta down 3.5%. Obviously, Nvidia has been disgusting all day, down 5.5%. Amazon down 3.3%. Apple right here is down about 2.5% on the day. It's been a nasty day. Even Bitcoin, which was showing signs of strength in the morning, started to come down. At one point, it went from 88.5 down to 86.7. Now we're at 87.3. So we're still green on the day, which is good for Bitcoin. But obviously, Bitcoin as well has not been able to keep up with all the momentum that it was keeping up with in the morning as markets were really getting hit badly. So I guess you could call it a pseudo recovery towards the end of the day. Thank you, everybody, for being here. We got a lot of stuff to talk about here, but it looks like we're going to be down at least 2% on the day. You know, one of the things about today is that it was almost 4% at its worst when we were really red about an hour ago, and it didn't feel like it. Like, it feels bad, it sucks, but at this point, I think the mentality is take us down below 4,800, which was the low of the year, to really get some emotion out of us. Because at this point, 2 to 3% S&P days feel normal in 2025, which shouldn't feel normal. 2 to 3% down days on the S. Even 2 to 3% up shouldn't feel normal either. But 2024 didn't have 2 to 3% up every day. 2025 is feeling like there's 2 to 3% down every other day. So ugly day, not really a recovery, but at least a little bit of reprieve from the absolute lows of 508 on the S&P at the bottom of today. Looks like we're going to close around that 512, 510 range. Okay, I have some news before we get into everything because, you know, I see a lot of you guys talking about it in the comments. And to be honest, this news might be more important than anything I'm going to say for the rest of the show. So it's going to break some of your hearts, but it is what it is. I've got to say it. It's going to break some of your hearts, but it is what it is. I have to say it. Someone said, how much am I down today? $31,000. $31,930.63 to be exact. If you guys want to put how much you're down today, feel free to put it in the chat. I'm at about 31K. For those asking for Steve to join the show, first of all, I asked him. He can't join the show today. He actually has meetings. He said he'll be free tomorrow, so we'll try to get him on before Tesla earnings. However, Steve is shook. Steve is shook, and he confirmed, I can tell you guys that he is shook. Meaning, for those that want Steve to call in to say everything's going to be okay, yeah, he doesn't feel like everything's going to be okay. What do I mean by that? Steve says, and I quote from my text messages, not going to sugarcoat it, Trump is doing a horrible job and is putting tweets out to try to do damage control just for the hell of it. He is fucking us and losing credibility. So for those that still want Steve to call into the show, I hope you're still fans of him after he said that. But yeah, Steve's not a fan anymore of this shit, guys. Steve's not a fan anymore of this shit. And what really took Steve over the edge, which I can't blame him, is the J-Pow tweet. He saw that tweet today and he was just like, wait a second, what is he saying? He's threatening to get rid of Jerome Powell. This is the new state of affairs that we're just going to. And by the way, Steve is not a J-Pow fan. Okay. I need everyone to Steve has been calling for the Fed to cut rates since May of 2023. He is not a fan of the concept of the Federal Reserve. And even he understands a president cannot remove someone they don't like just because they don't like their opinions, because then we turn into North Korea. We turn into a dictatorship. We don't turn into a democracy. And at the end of the day, Trump can complain all he wants. The one reason America is so great is that we don't allow leaders to just get rid of people that they don't like, even if they're heads of agencies that might not be making the right decision for the economy. So yeah, from that perspective, you can call Chris emotional all you want. I don't think you can call Steve emotional because Steve's been pretty level-headed this entire drawdown that we've had for the past 3 months. And that doesn't mean Steve's selling. That doesn't mean he's getting out of the market. That doesn't mean he's getting to cash. But he wanted me to let you guys know that he is not a fan of what Trump is doing right now, and he truly believes that he is losing a lot of credibility. The other thing Steve's annoyed about is this whole Huawei stuff in the context of NVIDIA. Obviously, Steve's a large shareholder in NVIDIA, so take that with a grain of salt. He's probably biased here, but I think Steve's pretty objective when it comes to NVIDIA. And he thinks this is absolutely stupid for Huawei to now be developing the same types of chips NVIDIA was developing and allowing China to retool the AI capabilities that they have by allowing a company to be able to get all the demand that NVIDIA was getting by essentially giving them the ability to build out the chips that NVIDIA cannot sell legal into the United States or into China anymore because of export controls. So it is what it is, right? He's obviously really annoyed about what's going on with NVIDIA in the region of China in the context of export controls. But more importantly, he's annoyed with this whole J-POW, let's get rid of the Federal Reserve type of nonsense that Trump's putting out in terms of his tweets, because he just thinks that's not a good look for the administration. So those are currently his thoughts right now. I think he'll be on the show tomorrow, maybe in the morning. Today he was just filled with meetings, but I wanted to get him on today. He's not gonna be able to make it tomorrow morning. He'll be on and give his thoughts. In general, Steve's not alone, dude. A lot of people are feeling pretty annoyed about what's going on right now in the markets. Here's my thing. My kind of take on this as well is like, you have the right to feel annoyed and you have the right to feel emotional because it's annoying, right? Like, it's really annoying. This is the three-prong approach of everything that's happening right now. The markets want trade deals or for tariffs to be walked back. Trade deals are highly complex, and even our closest allies like Mexico and Japan both said this morning they cannot give us everything we need. And then Trump won't walk back the tariffs because it would give up his leverage in getting a trade deal. And then you got Jerome Powell on the chopping block to potentially get fired since Trump is shifting the blame to him, which to me means you get out the popcorn and you kind of just like eat the popcorn if you can still afford it and see how this all plays out. Because you've got a lot of different moving parts in this market that are obviously incredibly volatile, and none of those parts have an easy solution to be able to get resolved. And I think that's why we're seeing some of the volatility that we're seeing right now. The other part of this market that's really annoying to a lot of people based on some of the stuff I was reading is that no one's excited to buy. Like, these are not the generational prices that people thought they would be, because the overhang of tariffs and the volatility from tariffs and the potential inflation from tariffs makes it feel like, all right, if I'm buying because I want to get more exposure, but I'm not buying because it's an August 5th moment and, oh my God, Meta's below 500, therefore I'm going to jump in, or Amazon's at 165, therefore I'm going to jump in. It's more so a question of just holding your nose and buying for the people that are buying versus getting super, super excited to buy because sentiment is bad. And yes, when sentiment's bad, that's when you want to buy. But is sentiment bad for a real reason? Yeah, I think so. I don't think it's a fake reason. I think the tariffs are a real reason. J-POW being on the chopping block potentially is a real reason to be afraid. And as a result of those real reasons, guess what else is moving up today, even if stocks are not? Good old bond markets. The 10-year continuing to go higher, 4.409%. That's up almost 1% on the day. Again, we are getting awfully close to the levels we were at last week when, what's his name, Besant had to step in. The 30-year, 4.912, a couple more basis points. You're going to be able to round up to 5% on that bad boy. That's not fun. That's obviously not fun. And then you got gold. And then you got gold that is at all new. It's higher than where it was in the morning. It's up 3.3%, $3,424 an ounce. What's going on right now, and what's also becoming a little bit more of a core narrative right here, is the sell America trade. Sell stocks, sell bonds, sell the dollar, get into gold. And I don't think this trade is going to last forever. I think there's a reason why DCAing is important, and ultimately having more exposure to the most amazing companies in the world matters. But as of right now, what we're seeing in front of our faces is the sell America trade. Bond stocks and the dollar going down the drain. Maybe for the short term, maybe for the bond market and the credit markets to send a message to Trump saying, hey, you cannot keep doing what you're doing. I mean, the market has a way of engaging in its own free speech, even if they can't literally say anything. The dollar right here down another 1.07% on the day. It's down to its 3-year low at 98.32. The market's upset. And it's not just the stock market. It is the credit markets and the bond markets and the dollar market, the currency markets, all three of those markets being upset at the same time. Again, that usually doesn't tend to happen. Here's a stat that I think will be really important for everyone. The Dow Jones index has fallen 1,000%, 1,000 points, not 1,000%, 1,000 points 11 times in history. 4 of those times was in April of 2025. Almost half the amount of times that the Dow Jones has fallen 1,000 points in a day has happened this month, and the month's not even over. One of those times, by the way, was today. I mean, that's just like, I saw that stat today and I was like, this has got to be a joke. Like, that can't be, like, it's insanity that's the type of volatility we're living through right now. And it's the nature of why I think this Sell America trade is starting to get a little bit more momentum. Again, I don't think it's going to last forever. I think at the end of the day, people will continue to allocate to stocks. I think if you're a retail investor, you're not managing some $100 million portfolio, stocks are probably the best bet over the next few years. But it is one of those things that the foreign markets, the currency markets, the credit markets, and obviously the large hedge fund stock markets are starting to engage in, which means what are they buying? Well, they're buying gold. We got another new report out today saying right here that hedge funds have slashed their Mag 7 holdings to a 2-year low. So this is from Morgan Stanley. Hedge funds dumped over 60% of their Mag 7 exposure last week per Morgan Stanley ahead of earnings. The Bank of America survey showed that only 24% of investors now see Mag 7 as the most crowded trade, down from nearly 60%. Gold is now the top trade for 49% of the correspondents in the survey, which is also pretty damn incredible. Now, what's retail doing? Retail, from my understanding, has been buying the Mag 7 pretty much hand over fist. I think, the Mag 7 stocks are probably the best stocks in the market. At the end of the day, they can weather all the storms, but hedge funds are de-risking to Mag 7. They're heading to gold. Might mean that maybe gold is topping out a little bit. I think gold is getting very aggressive. Gold technically never tops. It just keeps going up forever, even if it doesn't go up as aggressively as it's been going up. But you can obviously see people are leaving America and they're shifting their exposure to other entities. And part of that means leaving the Mag 7 stocks right now. So that's some of the pain that we're feeling in the market. Speaking of the Mag 7, here's another interesting stat. If we look at the Mag 7 year to date, we got Tesla earnings tomorrow, which is really going to determine the trajectory of where that stock ends up and potentially some of these other stocks. We also have some XAI news that we'll talk about in a bit. All of them are down 25% this year, except for Microsoft. Microsoft's down 23.3%, but Apple, Google, Amazon, Meta, Broadcom, and NVIDIA, all of them are down more than 25%. Netflix, if you want to include that in sort of the Mag 7, Mag 8, they're up year to date, actually, even though the Qs are down 15%. So Netflix holding on, but everything else that is not a consumer subscription to a streaming platform is getting hit still pretty badly year to date. Did anyone buy anything? Put in the chat if you bought anything, if you sold anything, if you made any moves today, sold any covered calls, sold any puts. Curious to see what people have done. I pretty much stayed put today. Did not do anything. And I don't know. I just don't feel like I'm in a hurry to. I've been buying the dip all year. I bought NVIDIA at 95 before 2 weeks ago. Like, it's not some incredible, oh my God, I need to buy the dip. Like, I am staying put. I want to see how the credit markets react. I want to see what Trump's next move is. I want to see if we get the Japan deal anytime soon. It was rumored to be happening this week. Let's see if we actually get it. And I'm curious what the turnaround is. It has been one of the most quiet 3% down days on the S&P 500. I'll say that. Like, it didn't feel like 3% when it was down 3%. Now it's recovering to down about 2.2%. There's no news for any of this recovery. I didn't see any news. It's kind of a little bit more technical. I guess people buying into the close, but it was a little bit more of an aggressive day. Okay, I see some Qs in the chat. I see NVIDIA hood, Tesla, Meta, Amazon, Mag 7s. I think that makes sense. I see hoods, sold NVIDIA puts. Waiting for hood a little bit lower. That's fair. Gold, Amazon, HIM, SoFi, Shopify, Salesforce, SMCI, VG, all the common names seems like are still pretty relevant. And this is consistent with a lot of the other macro data I've been looking at. I mean, retail's been buying the dip, even if the hedge funds have been selling. One of us is going to be right, at least in the short term. Long term, most likely buying the dip will be correct. Bayray says I sold Steve today. Dude, I wish he could come on today, because today's the first day where he actually cares about what, like, he usually never cares about like the market being down 2% intraday. But he texted me first today. He texted me and he's like, we got some issues. And I'm like, oh. And that's when he said, yeah, I think Trump's losing a lot of credibility right now. And it's fair. It's a fair point. Now, granted, one tweet can change everything. Just like, by the way, this all started when Trump put out that tweet about JPOW this morning. Like, as soon as he put out this tweet, that's when shit really started hitting the fan. I think he can change it as well. But, the question is, when is he going to change and if that's going to change? All right, here we go. We got about 20 seconds until the market closes. Got a lot of other headlines to go through throughout this close. Been a rough day to start out the week, but hopefully this week is going to be a little bit better than what we're seeing today. We got Tesla earnings later, Google earnings later. lots of Max 7 big tech earnings to get through going into this week. Thank you, everybody, for being here. Monday, April 21st, 4 p.m. The stock market is now closed. All right, we got through the day. S&P 500, 514, down 2.14% on the day. You see these green candles on the screen. At one point, it was 508. So I guess towards the last 20 minutes of the day, you had some buyers at least step in. Maybe they think there's going to be some news. Maybe there's going to be something after hours that's announced. I didn't see any actual headlines that would cause momentum buying. But you do have the S&P 500 recovering just a little bit towards the end of the day, still down 2.3%. Amazon down 3% on the day. Google down 2.3%. By the way, Google said that the DOJ's proposal for breaking up Google would harm the United States in the global race with China. They said that today. So Google trying to make their plea to the Trump administration saying, hey, if you break us up, you're just going to make China a lot more powerful. Based on the NVIDIA news today, China now has a company inside of the country that can potentially replicate the H100, which is obviously not good news for NVIDIA or the overall AI race. NVIDIA right here, 96.91. They were down about 4.51% on the day. HIMS was down 4.96%. Meta was down 3.35%. Nike, relatively flat on the day, actually a little green, 0.68%. So not super green, but it did have a little bit of staying power for the day. AMD down about 2.2%. Netflix was up 1.5%. Tesla down 5.5%. It was at 222 at one point, recovered to 228 towards the end of the day, but still down almost 6% on the day. Rocket Lab was down about 5.5%. Broadcom was down 2.8%. TLT was down 2% as yields continue to go higher. The NASDAQ was down 415 points, down 2.5%. Grab was down about 1%. Palantir down 3%. At one point, it was up 2% on the day, almost at $97. Right now at $90.80. That was down 2%. Adobe was down 1.6%. Robinhood was down 3.23%, $39.85. Reddit was down 2%. SoFi was down 2.64%. You have TSLL leverage against Tesla. That was down 11%, given Tesla was down about 5%. Again, NVIDIA down about 4.5%. Then Bitcoin basically flat on the day at 87.3. At one point, it almost got to 89, but started selling off a little bit closer towards the end of the day. Apple also taking a 2% drawdown, 1.94% on the day. And then you have Microsoft, which was down 2.35%, a little bit worse than Apple and Meta on the day. DJT was up 2%. Okay, cool. DJT, out of all things, was a little green. VG is down 1%. And then next decade, some of our liquefied natural gas plays, that was down 6.5%. We did have a headline from China. China inked a deal with, it looks like Saudi Arabia, to get a lot more natural gas, LNG, liquefied natural gas, than from the United States. Sorry, not Saudi Arabia, the UAE. So this came out today. They did sign a new deal. So, the United States sells a lot of liquefied natural gas. Apparently, China is saying, you know what? If you're going to have a trade war with us, we are not going to buy U.S. LNG, and we're just going to buy it from another place. And China continues to say, hey, you guys don't have all the leverage that you think you have, which to an extent is not necessarily wrong. I think the United States has leverage. I don't know how much leverage we actually have against China and some of these other names, but it looks like China is willing to go till the end of the fight to see how much leverage there really is. In terms of the semis, they also got hit today, given NVIDIA was down about 4.5%. Qualcomm right here down 0.38%. TSM down another 3%. Broadcom down 3%. ASML down 2.4%. ARM down 4%. Lam Research down 2%. Dell down 2.9%. And then Micron right here down 3% on the day as well. It was an ugly day. It was an ugly, ugly, ugly day. It wasn't as ugly as some of the days we've had in April. I mean, it kind of feels like April's been the longest month this year so far. I mean, April 2nd feels like it was so long ago, but it was only 2 weeks ago. And then April 8th, where we had, a very disgusting day. Same thing, was only 14 days ago, but it feels as if it just happened given the volatility and where the volatility is leading to right now. Amit, did you win the Hood Gold Bar? When are they announcing the winners of that? I don't even know when they're announcing the winners of the gold bars. I have like 3,000 entries, but I don't know when they're announcing that gold bar. I think they're doing it like later in the month, if I'm not wrong, at the end of April. But if anyone wins, let me know. Or maybe you get a notification if you win. I have not got a notification. on if I'm winning or not. But gold would, I mean, that gold would be worth something now, you know? That gold, I mean, it is just incredible to see the momentum gold has gotten. And it looks like it is turning into that core trade currently right now. Okay, so let's get into some of the other headlines. So this was some bullish news on NVIDIA. Although we had some bad news today in the context of China, we did have some good news right here. XAI. So XAI is now embarking on building Colossus 2, its next AI supercomputer cluster that will be much bigger and more powerful than Colossus 1, which was already the biggest and most powerful supercomputer in the world with 200,000 NVIDIA GPUs. Elon Musk has said publicly 2 months ago that he expects XAI's next training cluster to have 1 million GPUs, which is 5x the amount that was in Colossus 2, worth about 25 to 30 billion. And he says we're already working on the next training cluster. Now, this is bullish NVIDIA, because we're going to need to make up for the loss in China revenue. I am starting to be convinced that if you are an NVIDIA shareholder, you better get ready to not see any China revenue this year. If we get it, great. But I think the expectation should be that we are losing about 15% of revenues, and it is what it is. So we're going to need to have some level of AI demand to make up for that. And XAI may be the reason, or maybe one of the reasons for how we make up in that demand. Now, XAI, also a report came out this morning that it looks like they're trying to raise at $150 billion valuation, which is aggressive compared to the current valuation that they're at right now. And it looks like they're trying to raise about $20 billion. So this is not some small amount of raise that XAI is trying to do. It looks like they are trying to raise a significant amount of money. And the reason they're probably trying to raise a significant amount of money is because it takes a lot of money to buy these GPUs. And obviously, if they want to buy a ton more of these GPUs, then they're going to need the capital to do it. The question is going to be, what does the valuation look like? Which investors are part of it? Is Tesla going to be part of it as well? And then where are they going to get the ROI to justify all this upfront investment? Now, obviously, a lot of AI investors are not looking for the ROI immediately. Based on the report that I was reading this morning, it looks like they're doing about $1 billion in revenue. It looks like they're doing about $1 billion in revenue as XAI. Not exactly $1 billion, but close to $1 billion, which is good. But the company's valuation is almost 115, so it's trading at 115 times revenue, which is aggressive. OpenAI's valuation is actually incredibly attractive when you look at their valuation versus XAI. So it looks like if they raise more money, there's going to be more strategic investors involved. The question is going to be, how much money do they raise, and what does that mean in the context of how many more NVIDIA GPUs can they buy? Because obviously it would seem like they need to buy a decent chunk of revenue or a decent chunk of GPUs from NVIDIA. Are there any earnings today? There are not any earnings today. Tomorrow there will be earnings, but today there's not. Tesla's going to be the biggest one tomorrow. No earnings today. Would there be a 50% of revenue loss from NVIDIA? No. So if NVIDIA loses China, for my estimates, that would be 15 to 17% of the revenues they would lose for the year, which is bad. It's not like that's good. I do think that's tolerable, and it would at least create some certainty in terms of, okay, analysts can now project where they think NVIDIA is going to end up towards the end of the year. But it's hard to sugarcoat it. It would suck. It would really suck if we were to lose 15 to 17% of revenues. But it's hard for me to imagine that we're going to get those revenues back unless we get a deal with China. And again, those deals with China just might take a little bit more time to get there. Speaking of NVIDIA and the AI CapEx cycle, we do have context of Amazon. Their earnings are going to be really important. We're going to be looking out for how much they're spending when it comes to data centers. We do have some more news today on if that data center spend is going to be as significant as analysts thought it was going to be.
Not just navigating volatility anymore, it is increasingly getting boxed in, and the fundamentals are increasingly at odds with the headlines. And that is going to play out as we get deeper into earnings season. That could be, and rather, what was thought to be safe and even an untouchable theme, even amid this tariff turmoil, has been AI spending. But a note from this morning from Wells Fargo's TMT team, it cites several industry sources that say AWS has paused a portion of its leasing discussions. Now, if Amazon is slowing down on data center expansion, that could mean that AI spending isn't as safe or as full throttle as thought, and it could raise questions about demand and whether enterprise adoption really is keeping pace with all of the hype. Now, also important, this echoes positioning from Microsoft that it may be digesting leasing deals for data centers. And if 2 of the 3 hyperscalers are pulling back, that could further shake confidence across the entire AI trade. And certainly that is playing out today in the session. Stocks in the AI power, data centers, semi-trades, they're all getting hit hard, not to mention the Magnificent Seven, which are now getting pinched by Trump's policies at home and China's increasingly competitiveness abroad. Now, this certainly raises the stakes, Kelly, for Google's earnings. That comes up on Thursday. Will it remain committed to its AI spend, or will it give us any hints about 2026 capex or even 2025? That will be key for the broader AI trade, which has been hurting this year after sort of only going one way for a long time. And remember, Google is the third largest hyperscaler. So if there's any sort of cold water that they throw on capex, that could really hit the entire trade. Some of the stock.
So that news this morning is probably why Amazon took a little bit of a hit. Again, this is coming from Wells Fargo's and Cohen. They say both banks say Amazon AWS has hit a pause on some data center leasing deals, mainly international. Cohen notes that hyperscale demand is cooling a bit, especially in Europe, with Amazon slightly pulling back on the U.S. activity. Wells heard from multiple sources that AWS is stepping back from ongoing leasing talks, mirroring what's been seen in Microsoft lately. I don't think this is a oh my goodness, AWS or AI CapEx spend is completely going away. However, it's pretty simple to me. I mean, Amazon sells a lot of stuff from China on their website. And if they are seeing that there's a ton of issues in regards to tariffs, potentially demand, potentially increases in prices, they've got to cut spend somewhere. And, if you were to ask me straight up, hey, Amit, what's the massive AI benefit that Amazon has seen from all this capex? The only thing I would really be able to point to is better advertising and better algorithmic discovery in the context of their core website for selling products, right? So they can better target individuals that want to buy a suitcase or whatever it may be, because AI has trained a lot of their models in a better way. Now, obviously, AWS has benefited from AI workloads, but that's not really Amazon benefiting from AI. That's all these other people in the world are building AI companies, and they need AI workloads, aka AWS. But that doesn't necessarily mean that Amazon uniquely is seeing some massive ROI from their internal AI spend. And so they might be thinking, okay, we can pick up the spend a little bit later, but we don't need to legitimately spend everything that we were thinking of spending right now, because maybe we could buy back some of our stock if our stock continues to fall, if the tariff volatility is that bad. So yeah, that's not the best thing for Amazon. It's not the best thing for the AI story, not the best thing for NVIDIA, not the best thing for the Mac 7. If Google follows suit, we already know that Microsoft is closing off some deals in Ohio, then that could lead to the narrative that there is a true AI digestion phase. I think that narrative wouldn't mean that the AI thesis is done. But yeah, does it mean that tariffs are creating enough volatility for hyperscalers to pull back on spending? Sure. And if that's the case, the market's going to have to kind of reprice ultimately how they're thinking of the overarching AI trade. But then you got Colossus, XAI, saying they're ready to spend $30 billion on another million GPUs, right? So I think from that perspective, Amazon's been spending a lot of money, hundreds of billions in CapEx. If they want to pull back a little bit, that's not the worst thing in the world. The question is why? And I think the biggest thing on the earnings calls that we need to look forward to in terms of like getting clarity about what's happening. And I hope these are the questions that are asked, because I'm sure the analysts like need an answer to this question from Sundar, Zucks, Jassy, Tim Cook, etc. Is the volatility that we're seeing from tariffs is having some effect on your business. Is that effect enough for you to pull back or think of pulling back spend on CapEx? And if any of them say yes, or if all of them say yes, then it's just simple. Like this tariff volatility that might not literally affect Google is now literally affecting Google. And we have to deal with the new reality of the fact that, hey, that might be something that a lot of people didn't think was going to happen, but now is happening. And I mean, what do? You just have to react to the new normal. The only way that changes, and the sort of complicated part about this is because if Trump walks back the tariffs, which is great, that would be amazing. But like, that doesn't mean Google's just going to immediately say, all right, time to pick up AI spend again. Or Amazon say, oh, those leases that we canceled, we're going to start pulling those up again because now the tariff volatility has died down a little bit. Like these are big decisions that they may have to take potentially months to be able to renegotiate or get back into. And all of it is contingent on business sentiment, consumer sentiment, CEO sentiment, how companies are thinking of the future. Andy Jassy gave a great interview last week, and he said, we have to be first in AI. So you can tell the ambition of these CEOs is sky high, but the reality in terms of how much they need to spend to be able to achieve that in the short term, given at the end of the day, they do have shareholders. I mean, it might not be as high as it was a couple of months ago. So that is the nature of what's going on with this AI CapEx trade. And obviously it's still in development. I think we'll get a lot more clarity over the next coming weeks in terms of what not only the Fed does when we get a rate cut or not going into May, but also what these big tech CEOs say. Speaking of the Fed, the probabilities for a rate cut now in May have absolutely collapsed. In the morning, it was about 12%. Now it is 7.8%. It's almost like the market's just fully pricing in that Jay Powell does not care anymore about whatever Trump does. Jay Powell does not feel responsible for any problems that may arise because of not doing a rate cut. And probabilities for a rate cut are now below 10%. It would really surprise me if we get a cut in May. I think June seems more likely. June right here is at 68.4%. That seems like we have a better path to get it. I don't think we're going to get it in May. What will be funny is that if we don't get it in May, what does Trump do? Because in May, if we don't have the deals, the trade deals, and we don't have the rate cuts, what's left? Like, what is the argument for the Trump administration in terms of some market potential that would get you excited to buy stocks? The only way I could see it in my head, pause, another like different way that Trump navigates the excitement of the markets by saying, hey, there's different avenues to be excited for. We're still growing. I mean, Trump did have a bunch of quotes today. I'll pull those up right here where he said, quote unquote, we're going to make a lot of money. He said the EU trade deal is going okay. He says the economy is good. Energy is down. And he said that car and steel tariffs are going very well. None of these comments had an effect on the market because I think people are just like, they're done. They just don't care anymore. I think a lot of people don't care. Like, you can only say we have a lot of deals, just be patient. The deals are coming for I don't know, for another month, maybe another. I mean, they've already been doing it for a month. So at this point, it would be another couple of weeks before people completely are just like, screw it. And again, the 10-year, 4.41, the 30-year, 4.9. They are telling Trump, we don't like these tariffs. We don't think you have deals. And unless you announce something really soon, we're going to keep going higher. And if bond yields keep going higher, Basent's going to get involved. And then we're definitely going to get a tweet. Maybe that tweet's going to be when the S&P 500 is 4,800 again. But we will get a tweet that reverses a lot of this stuff to the upside. You know, the question is at what levels do we actually get that stuff? Chris says deals take a very long time. I agree. I mean, like, and the reason I really agree with that thesis that deals take a lot of time is because after Japan and Mexico came out today and they were like, we just can't concede to everything the United States is asking for. Like, it was, I mean, they were just saying, hey, realistically, there's no way we're going to be able to agree to everything that Japan or everything that the United States is saying. And what's troubling about this is that Japan's last trade deal with the United States was negotiated in 2019 when Trump was president. So Japan's prime minister today, he was also just like, hey, we kind of talked about this stuff 5 years ago when we had an agreement back in 2019 on what was fair trade. And now Trump wants to rip up everything and start over again. Like, that's fine. We can do that, but it's going to take some time. It's not going to happen in a couple months. Like, we have to really sit down and talk about the economic ramifications for Japan and the United States if we do that. Vietnam said they would go to zero tariffs. What happened to that? You know, it's funny. They did say they would go to zero tariffs, but then Trump instituted that 10% universal tariff across every country, including Vietnam. So, I mean, I think those talks are still being negotiated. But even the word negotiated at this point is super vague. I don't know how that's going to play out or what that means when there's a lot of negotiating going on. But that's the current state of a lot of these trade deals. We really have no other updates. There's no progress on Canada. There's no progress on South Korea. The only progress on Japan that we got today was the Japan prime minister saying, hey, like, we can't easily give in to everything that the United States wants. And that's what's happening. So any of the exciting deals that we could have got with Vietnam or South Korea, et cetera, a lot of those were up on the table a couple weeks ago. It just doesn't seem like we're anywhere close to that, at least currently right now. We did have another piece of news from the FTC. Uber is getting sued by the FTC right here. They are accusing it of deceptive practices related to the Uber One subscription service. Uber was down about 3% on the day. I have to read more into this. I'm not sure exactly what this case relates to, but apparently Uber has been charging people for Uber One, and they've been doing it in a way that's, like, in their words, very deceptive. Like, you think you canceled, but you didn't actually cancel, and there's some loopholes in it, yada, yada. I don't know what this looks like in terms of the fine that Uber would have to pay to the FTC, but this is another one of Bill Ackman's main holdings. Obviously, it would not be the best thing in the world if Uber has to pay a massive fine. Charles, thank you for the $10 super chat. Sold every profitable position I had minus Palantir. The rest I am stuck with. Look, it is what it is. I can't blame anyone who wants to sell in this market and get out of it. I personally am not doing it. I've not been doing it this whole year. I wouldn't do it right now. But the sentiment is starting to switch. The sentiment is not switching towards, oh, this is a bottom. The sentiment is switching towards, oh, this is like still pretty elevated in terms of the broader markets, given we have much lower to go, just based on the headwinds that everyone's looking at that's in front of us, aka no rate cuts and tariffs. And unless something changes, yeah, there's a world in which we could go lower. Again, I don't want to be the guy who times it. I don't know how to time it. I suck at timing, so I'm not going to play it out. But if people want to take that route, it is what it is. I mean, at the end of the day, you got to protect your capital the best you can protect it. All we need is one Trump X post. That is correct. All we need is one Trump X post, but as of now, that post is not here, and I don't know when it's coming. Here's Adam Parker saying that we've essentially lost a year of earnings growth, and that's also why it's really tough to be excited to buy this dip.
CNBC contributor. It's good to see you. I mean, you've been making the point that you've been feeling sort of worse and worse about the position of U.S. stocks. You'd like that to change, but it just hasn't.
Yeah, I think, look, there's nothing better than if you can be a contrarian bull and then be right. And you and I have talked about that in the past, but it's really hard when there's this much uncertainty, when the earnings estimates are way too high. They're always too high, but they're way too high. And we haven't seen any of that behavior yet where stocks that are missing aren't going down.
By the way, when he says earnings estimates are too high, just to do a little bit of math here, right? If we assume 2025, we're going to get $265 a share for the S&P. Multiply that by a reasonable earnings multiple, which is 20. That puts the S&P at 5,300, which obviously is not that exciting of a return given the S&P right now is at 513. Let's go a little bit crazier. Let's go to 22, right? So 265 times 22. All right, now you get the S&P at 5,800. But then the question is the street willing to give a 22 multiple, which historically is higher than the 16 to 18 range that it trades at, to the S&P? Now you can adjust the earnings and say instead of 265, we get 280 and then put a 20 multiple on that and you get to 5,600. That seems like it could kind of happen. But then it begs the question, are the tariffs going to actually allow earnings for the market to hit almost $300 a share? And as of now, no one knows, which is why it's really tough and uncertain. And that is why not only are stocks and the dollar getting sold off, but bonds are getting sold off as well.
You asked Leisman a question I can actually give a factual answer to, or the poly market has 20 cents, so 20% chance that Trump gets rid of Powell this year. So for whatever that's worth, I think that's what you got to factor into your distribution of outcomes. You can buy it for 21 or sell it for 81 cents right now. And you and I were together election night when we learned the poly market was right a lot.
But do you think, I mean, how much do you think the escalating tension on that issue is weighing on stocks in concert with all the other things that we're worried about?
I do. I think that's part of today's reasoning. I think it's got to be part of today's factor. It's just more uncertainty. And we know that they don't have a great relationship. And part of what I struggle with, and I think we talked about this last week, is if there's a recovery on the other side of this, it's got to include, the tax extension, less regulation, maybe some AI-proof cases, et cetera. But, there's also a belief that investors here in the U.S. have been programmed to believe that recoveries are V-shaped. And I think the reason they've been programmed to believe that is because you've always had monetary and fiscal stimulus simultaneously in most of their investment lifetimes. And what if this time the Fed isn't expanding the balance sheet and they aren't cutting a ton and there isn't incremental fiscal stimulus? Then maybe the upside isn't V-shaped, but it's kind of more of a slow grind higher. And that's what we're incorporating on our earnings outlook now, is that what I thought was 2026 earnings before, I now think it's 2027 earnings. I think we've lost a whole year of earnings growth because the policies have already happened.
And when he says we lost a full year of earnings growth, he's not saying that companies aren't going to put up earnings. He's saying that the expected growth, which this year was, I believe, 9 to 11%, which now, again, seems aggressive given the tariff volatility. The market prices all of that in. So the market says, okay, that's gone. Let's go to 2026. If you go to 2026 and the effects of the tariffs are going to have effects for 2026, if they stay in place the way that they are and we don't get any deals anytime soon, you're losing that entire year. And then you go out to 2027 and say, all right, can we recover this stuff in 2027 after the midterms, yada, yada. And if you can't make a reasonable projection in any state of the markets, whether it's now, or whether it was 2 months ago, or whether it was early 2023, you can't buy stocks, or it's just harder to buy stocks. Not that you can't buy stocks, but it's just harder and when I mean you can't, I'm not saying retail. I mean like the fund managers, the people that advise multi-billion-dollar portfolios, like these people can't meaningfully allocate capital if they can't actually understand where the market's going to go or have a sense of where they think the market's going to go. So where do they go? They go to gold because they have nowhere else to go, but they know that one thing is a better flight to safety. You would think they go to treasuries and say, let me at least get 4.5%, 4%, 4.2%. But now that they're so afraid of inflation, they're afraid that 10-year return is not even going to be as good because the tariffs are going to create so much inflation that if they get, 3% inflation and 4.5% on the 10-year, that 1.5% is not the type of alpha that they could get versus if they allocate it to something like gold or even something like a Bitcoin, which is why Bitcoin is potentially held up the way it's holding up. Obviously, my opinion on this is that these are the greatest companies in the world, and I think they will be able to weather the storm and they'll be able to get through it. But you can't be blind to the macro conditions and see that these companies will be affected by the macro if the macro stays the way it is. Obviously, I also think that if you're not managing $1 billion, then stocks are the best option in regards to really getting a meaningful return from an asset class. Like trying to time exactly when to buy these stocks are not the easiest, but it's also buying with the expectation of realizing that things could still get ugly. And currently right now they're getting pretty ugly. Basent launches push for financial literacy for Americans. Yeah, so Basent put out a video today. He's starting his new financial literacy course, I guess. It's not really a course. It's like a campaign for him to get more Americans to be financially literate, which is cool. That's awesome. I think like it's fine. I can't say anything bad about that. It's just like, if you already have some level of financial literacy and you've allocated to the capital markets, you kind of want this guy closing some deals, which is like what most of us care about.
America has been very good to me and my family, and I want to spread the word that through financial literacy, you can accumulate both financial security, peace of mind, and move toward your financial goals.
Look, yeah, we should be encouraging financial literacy, but we also need to get some trade deals done, and hopefully, we can get them done soon. Percent started a course before MIT. Oh my god, it would be funny if they actually rolled out a real course and at a discount code. That would actually be hilarious if they did that. Yeah, dude, it's just it's one of those things where a lot of people are just annoyed at everything that's going on in the administration. I talked to a bunch of different people today. Some of them that voted for Trump and that were that are pretty big Trump fans, and even they today were just like, this is getting to the point where the volatility is so annoying that I don't know what to do, and I don't know what Trump wants out of these tariffs. And I think that's my biggest gripe with the tariffs. Again, I'm not against the tariffs. I think the tariffs needed to be done because there were some bad trade deals. It's just the rollout of the tariffs and how they've been implemented. I think the average American doesn't understand what a trade deficit even is, and if it's good or bad. And before this whole tariff stuff, I didn't know what that stuff was either. I've had to do a lot of research over the past couple months to even understand, wait, what the hell is a trade deficit? And is a trade deficit good? Is it bad? Does it matter? Like what's going on here? And I think the average American just thinks, oh, we're getting ripped off by other countries without understanding, like, is there a reason we're getting quote unquote ripped off? Is there a benefit to having a trade deficit? What are the ramifications of having a surplus? Like, how does this all play out? And that to me is more so a question of A, communication by the White House, but B, like the sort of objective argument around, do we actually need to do something about this trade deficit? Is it such a horrible bad thing that if we don't do anything about it, the economy is going to collapse? And I think a lot of Americans are just like confused if it even matters in the first place. So as a result, you've got a lot of people that are upset about this, and the volatility from the markets continues to be as high as it's ever been. The S&P 500 right here down about 2.38%. The VIX on the day, how high was the VIX? The VIX was up 14% for the day. So ended up about 14%. Still not above that 50 level. We haven't got to that type of volatility. If we see the 4,800 on the S&P, we'll probably get back there, but currently we're not there yet. Amit, did you see Jeremy Siegel swapping his position on rate cuts this morning on CNBC? Yes, I saw him calling for an emergency rate cut. I mean, I think Siegel at this point is just being Siegel. He tends to cry when things get really bad. He wasn't calling for it last week, so I don't know what changed between last week and this week. Like from my understanding, nothing has changed like at all. And if anything, you could say we've gotten some more progress on deals, which is good. So, but it seems like Trump was listening to him, because after Siegel went on CNBC, Trump tweeted that a lot of people are referencing that we need to get cuts. And it seems like he probably listened to his rant and he wants to keep pressuring J-Pow, but not sure if anything is going to happen soon with J-Pow. Amit, my mom wants you to hear you say happy birthday. Happy birthday to Davis's mom. Hopefully you have a great time tonight. And hopefully Davis takes you out for a nice dinner and you get to enjoy, even if the markets are ugly as they may be. Also, if your portfolio is down, it's not Davis's fault, even though I believe he manages your portfolio. So you can blame him if you want, but I would say it's not his fault, at least for now. The Wall Street Journal did do a good 5-minute video on everything going on with the tariffs. I think it's worth watching. It tries to kind of break down the concept of the trade deficit. So let's take a look at this. I think for those that are still confused about what a trade deficit is, if it's valuable, how much is our trade deficit, this is something that might give a little bit of insight to everyone else as well. 4 trillion, we exported about 3.2 trillion. So there's about, call it $1 billion trade deficit.
Difference here is our trade deficit. And we've been importing more than we...
Sorry, $1 trillion trade deficit. So about 800 billion to $1 trillion of a trade deficit. That is right now. We finance the government by running a deficit. In order to finance that deficit, we need to sell bonds. In order to sell bonds, people have to buy the bonds. How are they buying the bonds? They're using the money from the trade deficit, because there's more US dollars than Chinese yuan or Japanese yen out there into the world because of that deficit, not because of the surplus, but because of $1 trillion trade deficit, in which they get to take that money and actually give it back to us. We have to pay them some interest on that over the long term, but that allows us to finance the entire economy. And I think most people, including myself, really aren't well versed on understanding this stuff. None of what I'm saying in this video has actually been explained by Lutnick, Navarro, Trump, or Besant. And I don't think they've really made a compelling argument for why is this a bad thing? Why is it bad for excess dollars to be out there in the world and for those dollars to either go back into the United States, either through investments or through bonds? Because eventually we get that money at the end of the day to finance the rest of the government or to have our economy go higher. I think it's a short video, 5 minutes. I'll share it in the chat if anyone wants to go deeper on it. But I think that video didn't even take a side on good or bad. The video just kind of said, hey, this is why we have a deficit. This is what the deficit allows the United States to be able to do. The number one problem, as you guys can tell from that video, is not the trade deficit. It is the actual deficit the United States government runs because we spend too much freaking money and we don't take in that money through tax revenue. Which means the actual answer to me is spending cuts. Now, that politically is very hard to do. People don't want to have you touch Social Security or Medicare, Medicaid, et cetera. And those are, and for the right reasons, right? Those are very personal things to Americans. They've already contributed a lot in their life to be able to achieve those things. So cutting on those is really tough. Elon's trying with Doge, but that's, maybe going to get us a couple $100 billion. That's not really going to move the needle. So I think Trump's master plan going into this year was like, okay, I can't severely cut spending. So what am I going to do? I'm going to try to cut the trade deficit, which will cut the overall deficit by bringing in tariff revenue. But if the tariffs not only get rid of the dollar as like one of the core currencies that people use to be able to buy bonds with or to be able to put back into the U.S. economy via foreign investment, if tariffs just decrease demand substantially, aka a recession, yeah, we're going to reduce the deficit. But like, it's going to come with a slowdown of growth. And then we'll definitely get our rate cuts because Jay Powell will have no choice but to cut in a recession. But, that's not going to necessarily help the stock market either. So, look, I don't have the perfect answer to this either. This is a very complex job. I'm not the president of the United States. I'm not one of his advisors. I'm just, as a American citizen, trying to understand, why is the trade deficit bad? Like, I'm trying to go back to first principles and really, like, given all the volatility that we've experienced, I'm trying to understand, why is this thing so abhorrent that we are causing another $2.5 trillion to leave the stock market over the past week, about 800 billion today, because of this like horrific deficit that we're getting cheated out of from every other country in the world. And I don't have the best answer to that question. I really don't. Like, I'm not saying that there isn't an answer. I just don't know what the answer is. And I think a lot of the people that are advocating for tariffs, they don't have the answer either. I don't think anyone has. I don't think Trump or Navarro have the answer. I think they have an ideology. And whether that ideology will be successful in practice, I mean, we're living through that real life experiment right now. But if there's a world in which the US dollar is not going to be used as much as it needs to be used, and we can't finance our debt as easily because we don't have the reserve currency of the world, not saying that we're not going to be the reserve currency, but that a lot of countries might just not want to use the dollar as much as they used before. Like, I feel like the unintended ramifications of that probably are not going to be the best either. And I don't know how this ends up playing out. Taxing billionaires would easily fix the deficit. So, like, yes, if we increase taxes on people that are well off, sure, that would bring in some more money. However, there is the other unintended consequence. This is what I think people on the left don't think about too much, which is that if we tax the crap out of billionaires, you will see a decrease in overall investment because those people want to invest because they believe they can get an ROI from that investment. And if you tax the crap out of them, this is the whole wealth gain, right? You take unrealized capital gains. This is what Biden was advocating for. Kamala kind of endorsed it at the end of her campaign. That's not the best idea either. I'm not saying that idea is amazing, but I'm definitely not saying the tariff reciprocal rates are amazing. I'm saying there's nuance to this. It's just that nuance I don't think has been found right now. And that nuance definitely doesn't seem like Vietnam's ripping us off, so we got to get something out of Vietnam. Unless the administration in the next couple months comes in with some phenomenal deals, which I will give them all the credit in the world if they can pull up those deals. And those deals, they prove not only reduces the deficit, but increases growth and keeps the dollar as the reserve currency because there's not a dismissal of the US dollar's role in regards to navigating trade relations between them and whatever countries they make deals with, which is possible. Like, they could pull that off. It seems kind of hard to do it, but I just don't know if they will. And that's why I think we're feeling a lot of this pain right now. 10-year 4.415. Again, that one is up, and the 30-year 4.904. Quite frankly, whatever I think or whatever you think is irrelevant. What the bond market is saying on a day like this is we are not fans of it. And Trump can think he has a bigger ego and he's the king of the world in every situation except this situation when it comes to the bond market. The bond market will humble not only the U.S. economy, but the entire world very quickly. It is the cost of capital, is the way we finance everything in our economy. If that thing is messed up, yeah, we're not going to be in the best situation. So I think, whatever we say is irrelevant right here. If those yields keep ticking up, and if they, which they have not found all day, if that continues going into tomorrow, yeah, I think we're going to still feel some pain. Here's an update on Bitcoin again, holding up relatively well against the NASDAQ. Here's a little bit of coverage on what's going on in the context of Bitcoin.
Welcome back. Not a lot of green on the screen today, as you know. However, you probably didn't look at Bitcoin. Janae McKeel did, and she's here. It's up 3%. What do you make of the way that this has been trading? It's decoupled, obviously, from the NASDAQ, which was a trend for a while. How do you see it?
Something that people were looking for all month, because if you go back to earlier this month, it really was trading in line with stocks. It just was not seeing the big, pops and drops that one we're used to seeing out of Bitcoin, and two, it is outperforming the S&P. It has not really caught up with gold, the leading safe haven. But I think you are seeing evidence, not just. I think that the obvious and easy narrative would be that we're talking about Fed independence today. So Bitcoin is kind of acting as that hedge against, political uncertainty. But I also think that it's not just enthusiasm; it's also exhaustion. You're seeing investors wanting to, get back into risk, but just maybe not the type of risk that's tied to earnings or Fed policy.
You got a quick thought?
I do. Look, you've got a president who's very interested, and his family's very interested in Bitcoin doing well, crypto doing well. And I think you're close to regulation or some positive announcements on policy, and that's what's driving it.
It's evidence, Bitcoin's supportive nature is evidence that we have not had a deleveraging event. Because you have a deleveraging event, everything's going down.
Well, it has underperformed the S&P and NASDAQ overall since the peak. Recently, though, to your point, it is trading pretty well, up from 82 just a week and a half or 2 weeks ago.
Real quick, last thought?
I think one of the hardest things for investors is to wrap their heads around the fact that day to day, it does trade like a risk asset, but medium long term, it trades like a safe haven. If you look at gold's outperformance, that kind of, can act as an indicator of where Bitcoin heads when the dust kind of settles.
Again, this is unique, bro. Bitcoin is not a safe haven asset. When Russia invaded Ukraine, Bitcoin fell dramatically that day. When we had geopolitical instability back in April of 2024 with Israel, Bitcoin fell. Like Bitcoin does not tend to be the asset that people go to when they think things are going badly. But the fact that they're going to it, I think just proves how afraid people are of the equity markets and obviously of the bond markets as well, if they're going into one of the most leveraged beta products in the world, which is Bitcoin. Could Bitcoin be changing? Maybe. I think it's a little too early to tell, but it's very encouraging to see Bitcoin somewhat decouple from the broader indices. I also agree with what one of the hosts said, which is that we haven't had a deleveraging event, because once that happens, and that could happen if the bond market keeps screaming the way they are, but then everything gets sold off, right? No matter what it is, no matter if it's the most undervalued stock in the world, it will go red because people need to raise cash and algorithms will take control and everything will get hit. But if we do have that event and it only goes down to 60,000, 50,000, I mean, that's still a pretty big win for Bitcoin, given most people thought it would really take a nosedive if the market took a nosedive, and that just hasn't happened. Which I think you got to imagine is rather bullish if you're part of Bitcoin. Or it could just be a bubble. I mean, it could also just be bubbly behavior right now in the context of what we're seeing. And the reason I don't think it's a bubble is because I think people are leaving other assets that are supposed to be secure and they're going to Bitcoin for a reason. And the nature of that reason is very real. And what's the nature of that reason? It's that people aren't trusting US assets anymore. Dollar, bonds, stocks, etc., which is okay. Like, I mean, the market is the market, right? There's someone who believes, someone who doesn't believe. But if they are choosing to trust Bitcoin, then the market is apolitical. They get to make whatever decision they want. And currently right now, they are choosing Bitcoin. All right, let me do a poll right here. Here's a question. I'm curious how people are thinking of this. We've been hearing a lot of this word more and more over the past couple weeks, definitely today. Here's the first question, then I'll ask the second question. Are we currently in a recession? There it is. There's the question. The R word. Are we currently in a recession? David says the tariffs are for national security. We're too dependent on other countries for elements associated with our defense and infrastructure. I 1000% agree with that. And I do think we need to bring a lot of things back to the United States. One of those things could be chip manufacturing and pharmaceutical manufacturing. However, again, do we really need to bring Nike shoes back to the United States? And by tariffing the crap out of Vietnam, that's what we're implying. This is what I think people are upset about. People are not against tariffs in a nutshell. People just wanted them to be more targeted, like they were in 2018 with China, and it was just China, and highly specific. And the probability of getting a deal when it's not the United States versus the entire freaking world versus the United States versus maybe 4 or 5 countries, 10 countries at max, I think the markets would have been able to handle that easily. But when you go up against everybody, because we need to have a whole new economic world order, that's when I think markets start freaking out about how this is playing out. 54% of you say we're in a recession. Interesting. So more than 50% of you feel we are in a recession. I mean, what happens if the 10-year goes to 5% or above? If the 10-year goes to 5%, which would be 500 basis points from where we are right now, first of all, I don't think that would happen. I think Trump would stop it from happening, or Bessent would stop it from happening, or something would stop it from happening. I mean, that would be pretty incredible. If that does happen, I think I don't even want to imagine how this plays out. I mean, at that point, if we actually do get above 5%, we normalize it. I don't know. I definitely don't think the stock market's just going to stay at above 4,800. Last time we got to 5% on the 10-year, October 2023, we didn't even touch it. We got to 4.92. We got very close on the 10-year, not the 30-year, the 10-year. And October 2023 was the bottom, right? The problem is a lot of people are saying, oh, well, there's all these bottom indicators. The problem with all these bottom indicators is that so for example, fear and greed, right? I think we can eliminate fear and greed as any type of an indicator, because how does this make sense? Fear and greed's at 22. Like, does anyone think that's really extreme fear? No, not really. right? It feels worse than it was 2 weeks ago, even though 2 weeks ago we were a little bit lower than where we are right now. I feel like it's trade deals or bust. I feel like all these bottom indicators are not bottom indicators. They're just things that we want to look at to be able to point to, hey, maybe we're forming a bottom. But realistically, the only way to form a bottom, and that's what the 10-year is telling you right now, and maybe the best way to form a bottom is for the 10-year to get to 5% like it did in October of 2023. Maybe that is the ultimate bottom indicator. So maybe that's the answer to your question. If the 10-year goes to 5%, I would hope we've bottomed at that point, because you can't go that much higher than 5%, I would hope. But all these bottom indicators to me are useless, because the only thing the market cares about now is getting a deal done. Particularly getting a deal done with China, but they will settle for anything at this point. Some random country from God knows where, if they announce a trade deal with the United States, I think the market would be happy about that. Even if it's not China or any of those others. But yeah, we can't see that 10-year get to 5. That would be, I mean, I don't even know. I think it would be insanity if it gets there. Maybe it would pressure the Fed to do an emergency cut. Yeah, that's another answer to your question. Maybe the Fed would cut. Maybe the Fed would be like, all right, things are really hitting the fan now. And maybe Trump wants it to get that bad, to get the Fed to cut, and whatever economic pain in the stock market that occurs from that, it's like whatever, as long as he gets his cut. Maybe that's the plan, but who knows if that's how it's going to be, the way it plays out. Cactus Jack says, Bitcoin thesis, asset value is in its network. Everything's a network. It's a defense, access, secure, decentralized, no CEO, movable, no tariffs, liquidity. Yeah, that's fair. I think all those things are reasonable parts of the thesis. Just historically, when you look at Bitcoin over the NASDAQ, it tends to fall with the NASDAQ. So I'm not even looking at all the central parts of the core thesis on Bitcoin, which obviously if you're orange pilled, you believe in a lot of these core elements, but just the way it performs with the NASDAQ has always been 1-to-1. Or I should say 3-to-1 to the downside. Bitcoin has always been leveraged against the tech index in the United States. If that decouples for the points that you see on the screen, it's got to be bullish for Bitcoin investors. It just might not be bullish for the broader economy. Which means who wins at the end of this? Michael Saylor. Michael Saylor wins at the end of this. Amit, do you think we're in a recession? Okay, so my answer to this is, and I could deeply be wrong here, but my answer is no, because the data that would point to a recession is not evident to me. 57% of you are saying we're in a recession right now. Now, the sliding scale to my response is that if the momentum continues the way it continues in the context of tariffs, I think it's very obvious, we're getting into a recession, because growth will slow down. And it's not just going to be negative GDP growth as like a technical recession. It will be an actual recession where companies will have to start firing people because they will not have the demand to afford the cost of labor. And then those people that get fired won't have the money to be able to go out on a nice dinner, which means that restaurant will have, this is the nature of what happens in a recession. I think Trump is going to stop that from happening once it happens, because remember what happens during a recession. Every month, we get non-farm payrolls and we get the inflation report and the unemployment report. All three of those metrics will be going the opposite direction outside of inflation. That'll be coming down, but it'll be coming down for the wrong reasons if you have a recession. Every month, the BLS will have to announce we've lost 100,000 jobs, or that the unemployment rate is up 50 basis points, whatever it may be, every month if we actually have a real recession. That means Trump is going to have to acknowledge every single month, unless he says the BLS numbers are fake, which we'll know, on the ground, people will actually be able to experience with their friends and family how fake things are. He can't deny that. So he's going to have to live with the fact that every month we are having negative growth, and he's going to have to somewhat make sense of it. I just don't think he wants to do that. I don't think he wants to wake up every morning or every Friday of the first Friday of every month and see the non-farm payrolls come in negative, which it hasn't been for the past 4 years, or realistically, since mid 2022. We've had at least a minimum of 100,000 jobs per month. 2022 was close to 400, 500,000. We were rebounding from the pandemic. And then 2024, it kind of leveled off around that 150 to 200,000. And just last month, we had, 228,000. So, if Trump has to own the fact that we're losing hundreds of thousands of jobs a month, which would really be an actual recession, not like a small recession, but that would be like, all right, it's recession time. I just don't think he's going to let that happen. Or I would hope he doesn't want to let that happen. Because what's the benefit from that, right? What does he get out of doing that? Realistically, what's the benefit to a recession? You get your rate cuts, okay. You get to refinance your, I mean, that's the only benefit I see. We get to refinance all of our debt as rates will come dramatically down. The Fed will probably cut more than 150 to 200 bips if it really turns that bad. And then we'll get to refinance our debt, but stock market will be done. Crypto, I don't know if crypto survives a recession. Bond yields will be down. So I guess, the bond market will at least be a little bit more normal, but it's not like it's going to be some great return. And Americans are going to lose jobs. So like, what does he get out of that? What's the benefit? Maybe you could say that it unlocks the housing market because mortgage rates will come down dramatically. And, this is what some of the bears have been saying for the past couple of years now, is that things are so bad that we need this massive economic reset, right? And we need interest rates to come down to like 2% so that mortgage rates can come down to 4% and auto loans can come down, yada, yada, yada. If you believe in that theory, then you believe that we need to have some, not cataclysmic recession, but at least some hard reset. And not just 2 quarters of negative GDP growth, but like a 2-year process of resetting everything. And, it would be a great time to buy stocks at that point because I would imagine things would bottom pretty aggressively there. But how bad does the reset need to be? Also, it's hard for me to say there's some massive recession coming when I see the earnings. When Netflix puts up the numbers that they're putting up, granted, we're not in a recession yet, but still, I think Q1 is going to go really good. The banks had a great Q1. I think the tech companies are going to have a decent Q1, even if their guidance is mixed. It's hard to look at those numbers and say, yep, that's recession. Until Q2, Q3, if the tariffs stay in effect and there truly is demand destruction, then you're going to see Starbucks coming out and saying, hey, yeah, people don't want to buy $7 drinks anymore. Because maybe people don't have the money to afford it as easily. How are people going to afford homes if they lose their jobs? That's a good point. I mean, this is the nuance, right? You get home prices to come down, you get mortgage rates to open up, but if people don't have jobs to easily pay a mortgage, then that's not easy either. Google's earnings is soon. That's correct. Let's talk about Tesla. We have Tesla earnings coming up. So Tesla has been downgraded across the board for the past couple of weeks. I think the average street target is now closing in on that like $250 to $300 range. Tesla right here down 5.5%. Let's do a poll on how you guys are thinking of sentiment right here. So Tesla below 200 tomorrow, yes or no? After hours, what do you think? Do we get Tesla below 200 tomorrow? I want to say no, bro. I really want to say no because everyone's saying yes, and I want to be the one guy saying no. But I don't know. It's like the numbers are going to be ugly, bro. Numbers are going to be ugly. They're not going to be good. And if that Model 2 is delayed, and then freaking Optimus doesn't really have any update. FSD doesn't have any update. Tesla's been slashing prices across. Do you know the new Model Y Juniper used to be like 52,000? Now it's 41,000 starting off. The new Model Y, yeah, dude, it's starting at 41,000. This thing, when I got my dad's legacy Model Y, one of the reasons I got the legacy Model Y for him is because they were taking off like 8,000 off the sticker price because they were going to get them out the door. The current Model Y, the new one, the Juniper, is the same price as the price I paid for my dad's. Now, granted, it's not all-wheel performance. It's long-wheel performance or long-wheel drive or whatever, so it's a little bit less in terms of the actual performance. But they took 10,000 off the price, which is, like not good in the context of demand. That to me is not screaming that a ton of people are ready to buy the Model Y. That to me is them saying, hey, we got to lower these prices. This thing was $52,300, around the range, 52 to 53, a month ago when I got my dad's legacy Model Y. And now it's at 41 grand. So what APR? It's the same regular APR, like 4% to 6%. They're not doing the 0% APR. When they do 0% APR, that's how I'll know there's really a demand problem. I got lucky with the 0% APR back in November, but they haven't done that since. But it's weird, dude. It's kind of weird in terms of how it's playing out. So I do think that the demand is not necessarily the best. And I also think that Cybertruck taking off $11,000 off the sticker price, that's also signaling demand is the issue. And then it's a question of like, hey, is the brand damage real? Is the brand damage real? That's the price after the tax credit. Yeah, but that's still cheaper than what the price would be after the regular tax credit. The tax credit's only $7,500. So I mean that means the sticker price is what, $48,000? couple weeks ago, it was at 53. So, okay, instead of taking off 10,000, they took off 4,000. So it's still a reduction in price. And we're seeing that across the Model 3 and the Cybertruck, which means to some extent, they're realizing, hey, we need to probably lower some of these prices. Which is fine, right? Like that's what a business has to do. But just in the context of investors trying to figure out, hey, where is the demand coming up? Or is it slowing down? I think that's something we have to also figure out. The other thing that I think is important here in the context of Tesla is it actually a supply chain issue going into why the deliveries missed by 60,000 cars, 336 versus 390 expected? Or is it a brand damage issue? And I'm thinking it's a little bit of both. Most of the Tesla bulls have been saying it's solely a supply chain issue. It has nothing to do with brand damage. I'm a bit skeptical on that. I think it's hard to say that in every major European country, including the state of California in the United States, registrations are down year over year. Like, I don't know. I'm not a Tesla expert, but to say that has nothing to do with the brand being hit, I feel is a little disingenuous. Granted, in Q2, if the numbers surprise to the upside, and in Q2 we see a massive beat in terms of the expectations, then yeah, maybe it was only supply chain issues. But now that you have tariffs, now that you have more volatility, now that you have these price cuts in the context of their flagship vehicles, will we be able to see some dramatic beat going into Q2? And if we don't, I don't think we can sugarcoat it anymore. Like, I think there's some brand issue here. Like, and that's okay. Like, I'm not investing in Tesla because of the brand. I'm investing in Tesla because I think robotics and FSD is going to be amazing. I quite frankly don't care about the brand issue. Like, if you care about the brand issue, you should stay away from the stock forever, right? But if you believe there's something better than the short-term momentum around the brand for the cars themselves, then you should be excited if you get a discount. And if we get a hefty discount, I would be excited in the context of Tesla. However, I think the brand stuff eventually has to be dealt with, because even a robo-taxi, I mean, people are not going to want to take a robo-taxi if they associate the vehicle with horrible brand sentiment. And that's basically what Dan Ives is saying today. I think a lot of people were being unfair to Dan Ives today, bro. Like, I'm seeing a lot of Tesla bulls like say Dan Ives is a sellout. He doesn't understand. I'm like, I think everyone saying that to me is just insane. Like, they've actually lost their minds. Dan Ives is making a simple argument. He's saying, hey, leave Doge, come back to Tesla. That's it. And people are like, Dan Ives is a sellout. He doesn't know what he's talking about when it comes to Tesla. It's like, what? What are you talking about? This guy's been bullish on Tesla since 2018. He's been bullish through the Twitter purchase. He's been bullish through all of the bad moments. It's just now in this period of volatility, he's saying, hey, it would be nice to have Elon full-time as the CEO. And you're going to say he's a sellout for that? Like, what are we saying here? This is ridiculous. So I think a lot of the people coming at Dan right here are just like delusional. Like, I like, it's insane that you could, someone who's been he's one of the only people in mainstream media that actually says, we believe in Tesla, we believe in Elon in the midst of everything. And you're going to come at him for saying, hey, it would be nice for him to not be spending every single day in the government now and come back to Tesla. Like, really, that's the enemy that the Tesla bulls want to go. Like, I don't understand it. It's unbelievable to me. But I think it speaks to the nature of how people are so polarized in the context of Tesla. And I get it. But that doesn't mean you go after someone like Dan Ives right there. Yeah, but doesn't Dan Ives not own the stock? Sure, but he's not allowed to own any stocks. He's an analyst. He doesn't own Palantir. He doesn't own Nvidia, right? Like, at the end of the day, he's just an analyst. He doesn't own any of these stocks, which I actually think makes him even more objective, because he doesn't own the stocks themselves. So he can actually look at them and say, hey, outside of like me making money on this or not, let me try to give an objective take. I would say he would be less objective if Dan was saying, ignore all the issues. Tesla's amazing. Like, at that point, there's nothing to analyze. At that point, you just buy the stock and shut up for the next 10 years and hope that it goes up. But given he's an analyst, given he has to talk to clients every single day on their positioning on the stock, yeah, he's going to make short-term comments on if it goes up, if it goes down. The fact that Dan turned bearish after being bullish for 2.5 years, and people are doubting his objectivity here, like, the reason he turned bearish is because he's not a fan of the tariffs. He's not a fan of what's going on with Doge. He's not a fan of the brand damage. That doesn't mean he doesn't like Tesla. That just means he's being realistic about what's going on. And if Palantir had the same issues, Palantir's just been lucky enough to not really have a ton of issues this year. They've been holding strong. Government growth is good. Seems like they're going to get more momentum. Then he probably would say the same thing about Palantir. But Palantir growth has been strong. CARP is not, involved as politically as Elon has been outright. And so you just don't have anything to complain about from that perspective. But Tesla is. And I think that's all right to complain about it. Dan Ives has lived his life traveling the world, learning about the companies he covers and their supply chains. He's a realist. Yeah, and that's another reason I trust him so much in NVIDIA. When he says he goes to Asia and he talks to TSM and he talks to all these other companies and demand is clearly outstripping supply, he's been right about that for the past 2.5 years. But then, you have export controls from China and the US on NVIDIA. He starts to say, hey, this is going to hurt NVIDIA. Boom. That's him being realistic about how ugly things are getting and how if the market is changing, you can't just say there's a pretty picture. You have to take note of the fact that things are getting ugly. We got a headline right here from the Wall Street Journal. Harvard has officially sued the Trump administration. There you go. Harvard has said it has officially sued the Trump administration. Harvard University says it has filed a federal lawsuit against the Trump administration, arguing it has violated the university's constitutional rights by freezing billions of dollars in federal funding, illegally imperiling its academic independence. Harvard president says the consequences of the government's overreach will be severe and long-lasting. Harvard argues that the lawsuit that the government has cut off funds as a part of its pressure campaign to force the university to submit to the government's control of its academic programs. All right. Well, Trump versus the Ivy Leagues in real time. There you go. We are now going to see how that ends up affecting the broader markets. Do you think Karp could be a better Tesla CEO? No. I think Elon is the only person that could realistically be Tesla CEO. So look, when Tesla bulls say, hey, I would sell everything if Elon leaves, I agree with them. So would I. That's where I'll agree with you. It's still Elon or bust at the end of the day when it comes to a CEO who has the capacity to take Tesla to the next leg up. Now, could Tesla survive without Elon as CEO? Of course, right? They'll still survive. But Tesla trades at a pretty crazy multiple, dude, just like Palantir does. And the reason it does, in part, is because of Alex Karp. For Tesla, it's because people believe in Elon. That doesn't mean we should be attacking analysts that criticize Elon, but I would also not be happy with Tesla stock if Elon left, even if he's only there 30% of the time. Now, I know some people are waiting for Elon to leave, and they would be very happy if Elon left. They would be more excited to buy Tesla. I think the actual, real visionary innovation, that stuff only can come from Elon, even if he's only there 1 day a week. So, Amit, you calling out people being polarized for criticizing Dan, but when you say it's Elon or bust, you sound like you're in a cult too. No, actually, that's called being 50-50. That's called being 50-50. So I can criticize people who get mad at Dan Ives for getting mad at Elon, but I can also have the same opinion at the same time that I would not want to be in Tesla stock if Elon's gone. I think that's actually pretty neutral. I would be upset if Elon left as CEO because I think he's a pivotal part to the Tesla story, but I'm not going to attack Dan Ives for getting upset that Elon's spending all of his time at Doge, which is why Dan Ives is not saying, hey, sell the stock. He's just saying, hey, it would be really nice if Elon comes back. And I don't think we should attack him for that. But he's also not getting rid of his buy rating because he still believes in Tesla. To me, I think that's neutral. I think that's less cultish, but more so about having a nuanced opinion on Tesla. Lil X becomes CEO of Tesla. Oh, speaking of Lil X, this what reminded me of him right here was this video with Pete Hegseth's kids. So Pete is at a hell of a day. First, the NPR said that the White House was getting rid of Pete as the DOD head, the head of the Department of Defense. They were looking for someone else. I immediately, and I wrote this on Twitter, said I think that's BS. I think that's fake news. I do not think that's true. Why? Because an hour before the headline came out, I heard Trump at the Easter egg roll thing say that Pete's doing a great job. So I was right. The White House came out and they said, hey, that's fake news. We're not trying to replace Pete. So Pete's going to continue to be in the DOD. But then this video came out, and I thought this video was just kind of funny because he's with his kids and he's talking to the media, and you can see how his kids are reacting.
This is what the media does. They take anonymous sources from disgruntled former employees, and then they try to slash and burn people and ruin their reputations. Not going to work with me, because we're changing the Defense Department, putting the Pentagon back in the hands of warfighters, and anonymous smears from disgruntled former employees on old news doesn't matter. So I'm happy to be here at the Easter egg roll with my dad and my kids, because this is what we're doing it for. These kids right here. This is why we're fighting the fake news media. This is why we're fighting slash and burn Democrats. This is why we're fighting hoaxsters. This group, this group right here, full of hoaxsters that peddle anonymous sources from leakers with axes to grind, and then you put it all together as if it's some news story. And when we know exactly what it is. So I'm really proud of what we're doing for the president, fighting hard across the board, and I'm going to go roll some Easter eggs with my kids. Thank you very much.
Dude, that was the funniest shit I've seen all day. That was the funny. Even his kids were like, all right, Dad, sure, fake news. Yeah, like his kids have no idea what's going on. You know, his kids are young, but I thought that was a little bit of humor in the midst of all the pain. But yes, Pete Hegseth is not getting fired. Now, I'm curious who the NPR got as a source, because, you know, the Trump administration could deny it, but if there is some legs behind that story, we're going to see it pop up again. I think the controversy last night was that Pete, in another Signal group chat, he mentioned something that he wasn't supposed to be mentioning, and his wife was in the group chat or some. I don't go too deep into these controversies, but apparently that happened. And so that's where the rumor originated from today. Again, I thought it was BS as soon as I saw it. It didn't feel like it made sense, given Trump's been talking very highly of him. But I'm curious if that source is a real source or if that's just purely made up. Because if it's a real source, that story is going to come back. It's just going to be a question of how it plays out. But I did think it was funny that his kids were just like, "What's going on, dude? We have no idea how this is playing out." Yeah, this is one hell of a year. I did do one thing today. I did at least. We'll end it on this, and then I'll see you guys back for the daily recap later today. We're not doing Robinhood Weekly because, quite frankly, we did it on Thursday. There's not that much that has happened since Thursday, so we might do it this week. If not, we'll just reset back on Monday. But yeah, no Robinhood Weekly tonight. We'll have a daily recap later. I did pay off my credit cards today. So I paid off my credit cards because if stocks won't show any gains, then at least a paid off credit card statement will make me feel like I'm not losing as much money. So if anyone has any credit card debt that they need to pay off towards the end of the month, maybe instead of buying the dip, you pay off your credit card debt, because that's what I did today. So there you go. At least we did that. You don't do this every month. No, I do this every month, but I decided to do it today because, well, the market was so bad. I was like, you know what? At least let me feel a little bit more richer by paying off my debt. Yes, I pay off my debt every month. Obviously, it's just, I don't know. Today I felt like I was being productive paying off my credit card debt versus looking at my portfolio. I was like, well, at least I'm a little bit more richer. I'm a little bit less negative here today. The only reason I use credit cards is because of 3% cash back. Like I don't use it for like travel or any of that stuff, but because of the 3% cash back, like I never use a debit card anymore, because like every time I use a debit card, I'm like, I could be getting 3% cash back on this. So that's why I use credit cards. It's taken Dave Ramsey course. Dude, that guy hates debt. I think he's wrong about that. Okay. I think that I don't agree with him on that idea. Like, I've heard him talk many times about this concept of like never go into debt. I'm like, well, some debt is good debt. Like, it's not horrible to have debt. It's like if you locked in a freaking 2.5% mortgage or 3% mortgage in 2020, yeah, like why would you pay off your house immediately when you can pay it off really cheaply over the next 30 years and get to better use that capital, especially if you can allocate that capital somewhere else. So I don't necessarily agree with that argument, but I also don't think people should be paying 20%, 30% on credit card APR. Most people struggle with debt, so I understand, Dave. Yeah, I mean, look, I think he is talking to the average person that doesn't understand that there's other places where you can allocate capital and get a better return. But for the investor class, I mean, theoretically, you should be able to get a better return than just immediately paying everything off. It's just 2025 has been aggressive. You know what I concluded? I think there's a world in which 2025 might be the year of aggressive covered calls. Like, because if you've been playing aggressive covered calls on this market the whole year, you've been printing. Like, you've been printing money. Like, I don't want to sell the NVIDIA $100 covered call, but like, if NVIDIA doesn't get to $100 this Friday, whoever's buying that call, that's free money. It's just as scary because Trump says one thing, some headline comes out of China, boom, NVIDIA gaps up back to 115 pretty easily. We've seen it happen many times this year, but then it always comes back down. So the covered call serves as this hedge, and you're able to continuously roll it, even if it's underwater, and it's able to then get out of water on a lot of these names. Same thing with Tesla. I mean, Tesla ran up to 287 at one point, and most people were underwater, but it came right back down because this macro has a hard time sustaining the type of momentum that we saw in 2024. And any bit of good news is counteracted with some bit of news that also makes you question if the news is actually good or not. And then you just get stock prices that then react to the downside. Yeah, 2024 puts were free money, or at least selling puts were free money. I hate to say free money, but the point is, like, if you sold puts in 2024 because stocks kept going up, like, you were able to really get away with it. 2025 covered calls have been better for most people, but you've had to be somewhat bearish on 2025 to sell aggressive covered calls. Like, I want to sell covered calls on Hood going into earnings, but then I'm like, I think Hood's going to crush earnings. So why would I sell the covered call? But then even if they do crush earnings, can they sustain any of that? Because we know Q2 so far in April, I mean, we'll see when we get the April metrics, but it's not like April's been some phenomenal month that is going to lead to these massive trading volumes. And if it is, it's probably temporary, because until we get back into at least somewhat of a bullish market, then it's going to be hard to imagine people are just trading and putting money into the platform every single day. You think they'll crush? No, yeah, I think they'll crush. I think the earnings estimates are like 910 million. Maybe they come in at 905 or 900 million, but I think if they miss by 5 or 10 million, that's not them like doing bad on earnings. I think overall earnings are going to be very good. And the earnings expectations have come down, to be fair. It was at like 930 at one point. Now it's at 909. So if they even come within that range, I think they'll be fine. But like, I don't think Robin is going to put up like 850 million and the estimate's 909. That they did that in Q3 of 2024. The estimates was 650. They put up 630. They missed by 20 million. Like, you can't miss by that much. They might miss by a couple million here or there, but overall, I think they're going to have a good earnings. I just don't know if the market's going to be like, okay, cool, we can buy Hood now, if it's still going to be a bearish market. Hood earnings are next Wednesday, April 30th. Next Wednesday for Hood earnings. Let me check the NVIDIA estimates. Those have had to come down, right? The NVIDIA estimates, dude, they're still kind of high. They're still assuming 43 billion. I thought that would go down after the 5 billion charge off, closer to like 39 or 40 billion. There's been 8 revisions in the past 90 days. 21 have been upgraded. I mean, dude, if NVIDIA can still put up some pretty good numbers, even with the China charge off, that means demand is amazing. But I mean, if they don't do that, then obviously it's going to be something where the market's probably going to react negatively. All right, we got a Trump tweet. We will end it out today on a Trump tweet. Let me pull this up. This doesn't really have to do with the markets. It's more so about deportations, but here's the tweet. All right. I'm doing what I was elected to do, remove criminals from our country, but the courts don't seem to want me to do that. My team is fantastic, doing an incredible job. However, they are being stymied at every turn by even the U.S. Supreme Court, which I have great respect for, but which seemingly doesn't want me to send violent criminals and terrorists back to Venezuela or any other country for that matter, people that came here illegally. The courts are intimidated by the radical left who are playing the ref. Great Supreme Court Justice Samuel Alito correctly wants to dissolve the pause on deportations. He is right on this. If we don't get these criminals out of our country, we are not going to have a country any longer. We cannot give everyone a trial, because to do so would take an exaggeration 200 years. We would need hundreds of thousands of trials for the hundreds of thousands of illegals we are sending out of the country. Such a thing is not possible to do. What a ridiculous situation we are in. Make America great again. Okay. So that doesn't have to do with the markets, but Trump continuing to make his argument that he wants to keep up deportations. I don't know, dude. He's fighting a lot of different battles here. He's fighting battles with Harvard now, fighting battles with the Supreme Court. I mean, the Supreme Court's not always going to go your way. That's the reason we have the Supreme Court. They didn't give everything Obama wanted. They didn't give everything Biden wanted. They literally, they rejected Biden's unilateral student loan forgiveness. Like, you know, you don't get some things that you want as president. That's why we have a Supreme Court. So he can fight these battles, but there's a lot of moving parts to this stuff. And ultimately, if he tries to take the Powell debate up to the Supreme Court, I think it would just create a lot of volatility in the markets, but it would also be another battle that he has to deal with. Again, there's a theory in poli-sci, political science, which is called political capital. You don't have unlimited amounts of political capital. We talked about this a while ago, but Obama used the majority of his political capital in his first term on one thing, which was the Affordable Care Act. And he got that through the door. He got a bunch of Republicans to finally agree. They had to make a bunch of bipartisan adjustments, but he got it out the door. Trump used the majority of his political capital in 2017 on the tax cuts. Now, it feels like he's trying to use the political capital on tariffs. Then he's trying to use it on defunding Ivy League institutions. Then he's trying to do it on deportations. I mean, there's a lot of different things. It's not really like, and then he still has to pass his tax cuts or make the 2017 tax cuts permanent, which is going to have to go through reconciliation in order to get that made into law. So he's got a lot of things he's trying to get done. And I don't know if he has the political capital to get everything done. I think sometimes you got to pick your battles here, and every administration has to pick their battles, right? Like you don't really get many major landmark bills that you can pass or many major things you can do in a couple of years, but you get to have at least one. And he's already done a billion things through executive order, so he's already gotten a ton of stuff done. But that major one, it might be tariffs, it might be the courts, might be deportations. I don't know if it's going to be all of those things. Jason's not going to be on tomorrow, guys. We have Tesla earnings tomorrow, so we're not going to be doing Technical Tuesday. We'll probably get him on Wednesday if he's free on Wednesday. We got Tesla earnings tomorrow. It's going to be a big one. I'll have Jose with me. I'll have Couch Investor. I'll try to get a couple other people. But Tesla earnings is definitely going to be something that we have to look at. Okay, so Robinhood posted that if you won a gold bar, they messaged you. So apparently they message people in the app if they won the gold bar. I did not get a message, so I don't think I won the gold bar. But if anyone did, let me know. I don't think I was the winner of a gold bar. Some of you guys might have. I'm sure people will post some pictures on Twitter as well if they won a gold bar. Is Granny Shots not a crazy name for an ETF? It's a interesting name. Tom Lee rang the bell today, which was pretty cool. I'm happy for him, dude. Fundstrat, it's an incredible company. And Tom Lee's been able to really build an amazing brand as well. So it was really cool that he got to ring the bell today at the New York Stock Exchange. Granny G. You know what's really funny about this? GRNY. So that's the ETF. Steve and I are actually thinking of starting a new series. We were going to do it over the weekend, but we got busy. But we took a look at Granny Shots, which now has $1 billion AUM. That's why he rang the bell. The ETF, in my opinion, is not like comprised of the most interesting names, I would say. I mean, some of the names I agree with, but if you look at the top 10 holdings, but I was reading it to Steve over the weekend and he was like, this ETF sucks. So there's Progressive, Netflix, Palantir, Palo Alto, S&P Global, Abbott, Costco, MicroStrategy, CrowdStrike, and Microsoft. I don't think it's a horrible earnings or a horrible ETF, but I think there's a new way you can organize it. So the series that we were going to start is like, we'll pick one ETF, like ARK, for example, and we'll reconstruct what the ETF looks like. So if we had to make a thematic ETF based on growth, or a thematic ETF based on healthcare, or a thematic ETF based on being defensive, like what would be the top 20 stocks you put in that portfolio, or at least the top 10 stocks? So that was kind of the idea behind the ETF. Now, granted, I don't blame Tom Lee's year-to-date down 15% performance because the entire market's down 15%, right? So it's like any ETF in a market where it's a bearish market, unless the ETF is just spectacular at navigating position sizes, yeah, it's going to be a tough way for them to beat the market. But that's the idea of the series. And I think like a dividend ETF, for example, right? I think there's a lot of different ways we can pick different ETFs and then kind of focus on how you would best optimize those ETFs. So this is the top 10 positions. You can see right there, Progressive, Abbott, Netflix, Costco, Palantir, MicroStrategy, Palo Alto, CrowdStrike, S&P Global, and then Microsoft. And then 2.1% of it is also part of Tesla as well. Launch your own ETF like me, Kevin. I don't think I would ever launch an ETF, dude. I think an ETF is just, you have to have so much money to launch an ETF. There's a lot of tax advantage benefits to be able to trade in and out of an ETF, but you need to have like hundreds of millions of dollars for it to actually produce an expense ratio that is meaningful enough to be able to run it. So unless you can get the reason Tom Lee can do it is because, I mean, he's Tom Lee, right? So he can get $1 billion into his ETF. The reason I think Meet Kevin's failed is because Meet Kevin is cool, but he doesn't have the brand that Tom Lee has. So I think at most he got to 50 million. And then the problem is in 2024, he went super bearish and, we ran in the markets. And so the ETF obviously underperformed, but you need to really get hundreds of millions of dollars, I feel like, to have an ETF that is able to make money. And if you're not, then what's the point, right? People can just buy every other type of ETF that's out there because there's so many other ETFs. There has to be a reason you would trust Tom Lee's granny shots over the S&P. And it's probably because you like Tom Lee if you're buying it, right? It comes down to, hey, do you like the person that's managing the ETF? Same thing with ARK, which somehow still, this thing, let me give you the exact number. Cathie Wood's ARK, even after everything she's been through in the past couple of years, this thing still has 4.8 billion under management. At its peak, it was about 35 billion, which is crazy. And the top 10 holdings there are Tesla, Roku, Palantir, Robinhood, Shopify, Coinbase, Roblox, CRISPR, Tempest, and then Twist Bioscience. So, there's a few of those that obviously have not performed. Roku's 7% of the ETF, and Roku's been a disaster. So that already, it said Zoom at one point was number 3 in the ETF. Zoom, she sold out of, but Zoom, she took a big loss on. So a lot of these names at the end of the day, they have to have some staying power in order for them to uplift the ETF. 0.75 is his expense ratio. Yeah, that's pretty expensive. That's almost 1% that you're paying on every dollar, which is obviously a bit expensive. Amid ETF, Grindr, Williams-Sonoma, Volkswagen, Rheinmetall, and Estee Lauder. Okay, so first of all, Grindr has held up in this freaking market. We are almost at $20, folks. We're almost at $20, okay? I'm just saying, seems like demand for the product has worked out, even in a bear market. People still want to date, and Grindr allows them the possibility in a certain demographic to date. So this one has clearly outperformed Bumble and Match and all the other dating apps. I think my thesis on it it's been proven to be correct so far. I think it'll still be correct over the next 5 years. They have a monopoly on gay dating, and gay men in particular are one of the most affluent populations in the United States. They can afford the freaking $30 subscription every month to pay to Grindr. And they're growing 30% year over year, bro. This is not some small 10% growth. This is a growth stock. So yes, the valuation's up there, but it's funny that people are allocating to it in a world in which, other growth stocks like Nvidia are getting hit pretty badly. Is it better than Celsius? What is Celsius year to date? Celsius year to date is 32%. I don't know if Grindr is 32%. Grindr stock year to date is 7%. Okay, 7.5. So it's not as good as Celsius. Celsius is still the king. This year, it's held up. But some other names haven't done horrible. So shout out to Bay Ray on this one. He's been publicly bullish Celsius for years at this point. I didn't believe him. I didn't think Celsius would hold up, dude. I really didn't. Forgive me for thinking Celsius energy drink would not be up freaking 30% this year, beating Google or Nvidia. I didn't think it would. I really didn't think it would happen. And I'm meeting my words on this one, so it is what it is. But if you believed in Celsius, you've done well. I cannot believe that this happened. It's you couldn't pay me enough money to believe that Celsius was going to outperform Nvidia this year. Granted, the obvious reason for why is that Nvidia was at all-time highs and Celsius was basically at all-time lows at $20 at one point, $22. So it's just easier for Celsius to outperform, whereas Nvidia needed to, put up some real growth. And unfortunately, with the China stuff, the tariff stuff, that has not allowed Nvidia to do as well. All right, cool. I think that's it for the day. I will have a daily recap coming out in a bit. Again, no Robinhood Weekly tonight. Also, by the way, guys, we got to change the name of Boys in the Hood Weekly, because they reached out to us. They said, yeah, you can't use the word hood either. So if anyone has a good name, I don't know what we're going to call it. I think we might just call it Tech Bros or something at this point. Like, I don't know. I don't know what they want us to call it, but it is kind of dumb in my opinion. Like, this is like, it's kind of, I really don't think it's Vlad or the management. I think it's the lawyers just being stupid. Like, lawyers tend to be stupid, and I think they're just like really afraid. And so the lawyers came back and they were like, hey, can you just like not do that? So bros grinding. Oh my gosh, dude. Shout out to Palantir. Palantir doesn't give a you-know-what about using their name in the weekly. Palantir's just like, whatever. Palantir's never cared ever. They've never even heard of them caring about this stuff. I don't know why Robinhood's being uptight about this, dude. Something's going on that they're being so uptight. I think, I don't know who reached out to them. And SoFi as well, because someone told me Tevis did get an email from SoFi. Someone reached out to them, and they're like not happy that there's like a podcast dedicated to the company. And I don't know why. I don't know what it is. I don't know who it is. I really doubt someone from the SEC like cares that much that we do a weekly podcast on Robinhood. I just don't think it's the SEC. It might be a sell side analyst that doesn't want to be associated with doing research on a stock that has a weekly podcast associated with it. Okay, that sell side analyst is just stupid, because one of the reasons Robinhood has outperformed the market over the past couple of years is because there's a retail following and people actually talk about it. So I don't know. I don't know who it is, but how can Robinhood own the word hood? They can't. So this is more so a favor that we're like, I just don't want to be a headache for them. They've treated us very well. They love us. They support us and all that stuff. So I don't want to give them a headache and fight for the fact that I'm going to use the word hood, because it's like, who wants to be a headache, right? Like, they obviously they have a ton of stuff they're dealing with as well. But I'm sure their lawyers and legal and compliance team was just like, hey, like this, for some reason, like from my experience with lawyers, they look at the most extreme situation of something bad happening, and then they turn that into something that will happen. And as a result, they try to find an argument for, why like this shouldn't be the case. And I think that's what's happening here with Hood. I think the lawyers are just like being lawyers and being annoying. Chat says we share your videos of Palantir Weekly all the time. People are into themselves. Yeah, I mean, it's funny. A lot of the Palantir Weekly videos I've seen been shared all the time with from Palantir employees themselves. Lawyers equal fun killers. I don't know, dude. I think it's something. I think it's something. Like they sent me the email over the weekend. They're like, yeah, you can't use the word hood either. And I'm just like, okay, what's going on here? Like they must be like something. The lawyers are seeing something that's like really giving them anxiety. And I'm like, all right, we'll comply. I mean, I don't want to be a problem for no reason. And I'm also not that confrontational, so I'm not going to like fight with them to use the word hood. But it is weird that their lawyers are being this uptight about this. My theory is that they're getting sued from so many states with the sports betting stuff, and they already have so many lawsuits. They just paid the SEC $45 million a month ago. Like, they probably don't even want the probability of anything coming up, which I understand. I think that's very fair. Like, I'm like, yeah, it's a $50 billion company. At the end of the day, they don't want to deal with like little issues like this that could be brought up. But I also think it's the lawyers just being, paranoid at this point. So it is what it is. Mediocre Weekly. That's funny. We Are Gay Weekly. Okay, I don't think that's the best name. Bros and Hoodies. Imagine that's the new name, and they reach out and they're like, "Hey, can you not use the word hoodies?" Like, dude, then I would be like, "All right, I guess we don't own any word that even thinks of having hood inside of it at this point." That would be hilarious. That would be hilarious. The Sherwood Forest. I was thinking of like fintech bros. Call it Robin Weekly. Oh my gosh. This is actually a good one. That's actually kind of easy. Robin Weekly. Like, what are they going to say to Robin Weekly? I can't say anything to Robin Weekly. I was thinking Vlad Weekly, but that's way too much glazing, bro. Vlad Weekly is way too much gazing. That's way too much. I don't know. We got to think of a name. You got to help us think of a name, but we'll figure out something. Swavy Boys Weekly, bring back the band. That would be hilarious. Fintech Bros. I was thinking we give it a name that makes us like a name that's so ambiguous that you could talk about anything on the podcast, even though it's going to mainly be about Robinhood. But sometimes we talk about a bunch of other stuff. So like, I don't know, Tech Bros or something basic like that, that allows you to kind of just cover a bunch of issues, even though Hood will be the main subject every week. So I don't know. We'll figure it out. We will figure it out. Where'd the buy, sell button go weekly? Oh my God, dude. That's hilarious. That's absolutely hilarious. All right, I think that's it. I'm done. I'll be back tomorrow on the market open, as always. Dumb Money Weekly actually is not crazy. Dumb Money Weekly. It's actually that's a fun name. Probably shouldn't call it Weeble Weekly. I don't know. I think Tech Bros or something. That's what it'll turn out to be. In terms of the markets, nasty today, as always. Nvidia down 4.5%, Tesla down almost 6%, S&P 500 down 2%. Tomorrow is Tesla earnings. I have no idea what to expect for Tesla earnings. We'll see how it plays out. I'll be live as always. I don't know. We'll try to see what Elon can pull out of the hat this time, and if he can create some momentum. I really think he's going to say and talk and be like super optimistic about the future. Don't know if the number is going to back that up. And if it doesn't, we get a buying opportunity. Question is, how big is the buying opportunity? Why is Grindr up 3% after hours? I swear every time I talk about it on the show, and I don't think I've referenced it in like a month, it ends up going up after hours. So, dude, when this thing was $14, I saw it go up 3% in real time as I was talking about it. Some of you guys, you hear it on the show and you go straight to Grindr, bro. Every time. Every freaking time this thing pumps after hours. Look, I don't know if it's a good price. Right? At 14, it was a steal in my opinion. I did buy it at 12, then I sold it at 12.50. Then I bought back at 14 because I believed in it so much. I was like, I'm going to be right on this thesis. So far, the thesis played out. But, I mean, it's trading at a 10 times price to sales. It's growing, but it's not like NVIDIA type of growth. So I wouldn't buy it at $19.30. I would be a bit more skeptical about this. It's a $4 billion market cap. They're not doing, even $1 billion in revenue. So it is an aggressive multiple, but I think it's being traded like that because users think investors think there's a moat to the platform. But it's thinly traded as well. So it could be like a couple shares moving it after hours, and then that could fall tomorrow on the market open as well. All right, cool. That's it. Thank you everybody for being here. Again, market's nasty today. We'll see what happens with Tesla tomorrow. That's going to be a big one. It'll determine the trajectory of probably some of the Mag 7 earnings, and then obviously what goes on with Tesla for the rest of the year. I'll be live. We'll cover it every single day, as always, definitely tomorrow. Then we have Google on Thursday that warned the Trump administration today to not break them up, or else China's going to get ahead in AI. So Google and Tesla this week definitely will be very important as we get through one of the last weeks of April. And then we've got Canada this week. I didn't send out the details yet for the location. I'll probably be sending that out tomorrow. So again, if you want to join, this is kind of one of your last chances right here. You can check out the Google form. I'll be sending out all the details probably tomorrow. And then Saturday, we are doing the meetup. So it should be fun. I'm excited. I've been looking up a bunch of places in Toronto. Got a couple places I want to go to. I told you guys I'm staying with a friend. It's a really big penthouse, so that'll be kind of cool to see what the downtown Toronto nightclub scene is like, all that stuff. So I think it'll be fun. And then Saturday we will do the meetup. And it is what it is. I'll try to get Steve on the show tomorrow morning. I tried to get him on today, but he just can't do it. But again, to reiterate what Steve said, for those that missed the beginning of the show, for those that want to hear Steve's calming voice, you're not going to get that. He said, and I quote, "Not going to sugarcoat it, Trump is doing a horrible job in putting tweets out to try to do damage control just for the hell of it. He is effing us, and he is losing all of his credibility." So if you hated Chris because he's not the biggest fan of what Trump is doing, you're going to start to hate Steve as well, which I think goes to say more about Trump than Steve, because Steve's been very neutral for the past 3 months. And finally today, Steve was like, all right, this has got to stop. This is getting ridiculous. So maybe it's a bottom signal. Who knows? We'll see how this ends up playing out over the coming weeks. All right, cool. Thank you, everybody. I'll see you guys tomorrow on the Market Open. Bye, everyone. Have a good one.